Mercedes unveiling two refreshed models at its plant in Alabama today. The luxury automaker plans to invest more than $7 billion into its U.S. footprint, all in an effort to reach 400,000 annual car sales in the U.S. by the end of the decade. CEO of Mercedes-Benz USA joins us this morning alongside of Phil LeBeau. Morning, Phil.
Good morning, Carl. Adam Chamberlain.
Good morning.
We're on the line, literally on the line with the GLEs rolling off.
Feel the energy in here.
And we're going to talk about the new GLE and GLS in just a little bit. But first, I want to talk about the goal of increasing sales basically by about 30% by the end of this decade. How do you do that?
Yes, sir. Well, first of all, you have a really great product portfolio. And if I look at our product portfolio and think about our core cars, GLC, GLE, GLS, we see significant opportunities to grow the sales of these cars. We then work in lockstep with our dealer partners. One of the things I've been really keen on trying to do, Phil, is simplify our approach with our dealers to keep them focused on selling cars, parts, and looking after customers and delivering a great client experience. So that's the fundamental principle of our plans.
About 60% of what you sell in this country is imported and are subject to tariffs. So we're coming up on the one-year anniversary of Liberation Day when the tariffs were put in place. And that's cutting into your margins. Are you worried that that is going to be tough? It's going to be tough to increase sales given that tariff headwind that's there?
Great question, Phil. I think one of the things we've really consciously tried to do is look at our competitive position. So, for example, since tariffs have been launched, we've only increased our prices by 1.3%, significantly less than inflation. We've been laser focused on growing our overall volume towards that plan of 400,000, and to do that, you have to be super competitive at the point of sale.
But that comes at the expense of margins, which are going to be under pressure.
So it takes a hit on us as a company, but I believe the bigger goal is to grow our volume and recover that margin through volume.
You take over Mercedes USA after a stint running Lithia, the auto dealership group. So you know what the dealers are going through, and you know what your dealers are hearing from the consumer. Are you sensing any kind of a slowdown in consumer demand, any hesitancy with the consumer?
I think if you look at the market in the first couple of months of the year, the market environment's definitely a little tougher than we'd anticipated. I think there's lots of distractions out there, whether it's geopolitics and everything else. I think what we have to do is be laser focused on ensuring we have super competitive positions for our products. And right now, if you look at our lease and finance office, we've never been more competitive, and make sure we declutter the space for our dealers to focus on giving a great customer experience.
But to get back to my question, are your dealers saying to you, look, people are getting a little more hesitant out here, or are they not seeing that right now?
I think they're seeing a little bit more confusion, and I think there's a little bit more hesitancy, but I think overall, we saw this morning, the consumer confidence remains relatively robust, and energy, whilst important, is still a relatively small share of the wallet. So I think our job is to declutter the environment and help our dealers give a great client experience.
You've been in this business a long time. You've seen gas prices go up and down.
Yes.
$4 a gallon, is that much of a headwind to make people think twice about buying a car, or does it have to get up closer to $5 for an extended period of time?
I think in the short term it's manageable. And we've seen before at $4 a barrel we can sustain that. But I think over a 90, 120 day period at closer to $5, it starts to become a bigger distraction. I think the other thing, though, we have to focus on is actually we've now got super efficient engines, whether that's our combustion engines with 48-volt technology, we've got plug-in hybrids, and we've also got new generation electric cars. So to a certain extent, we can offer alternatives for the consumer that are less impacted by gas prices.